You have to understand that when you trade crypto, the risk isn't just about the token and the volatility of the token. It's also about the platform on which you're trading it. And so you've got to do your own due diligence and try to figure out which platforms do you think are at least operating with the greatest amount of integrity.
Well, one thing is certain, the commission did due diligence on Solana, on Cardano, on Matic, on Atom, on SIM. They made it very clear. These are, I'm not saying they're phony, but I'm saying that they're basically scams.
They're securities.
They're scams.
Yeah. Well, no, they're not saying they're scams. They're just saying they're securities. And
no,
therefore,
they're inherently difficult. How about difficult to value?
Well, I think the value issue is difficult with crypto because, again, a lot of these tokens, all the ones that are unbacked, it's really, you know, what does the market think they're worth, even though they're not really connected to anything underlying of real value. And again, the use case is not always clear. But, you know, I think the question is, can we create a framework that prevents fraud, prevents manipulation, ensures investor protection, and, you know, let people invest and see what happens?
Why doesn't an exchange just put a register, show you some clarity, and allow you to do what we all want,
well,
which is
the business model of these exchanges is inconsistent with the way our securities markets work.
Why, though?
Well, because they are more vertically integrated. And, you know, the question is, could they really change their business model to follow that? And they would also argue, look, the securities disclosure rules don't work.
But Tim, what do they have to fear? What we all want to. What do they have to fear that they keep hiding things?
Well, again, they're saying the laws don't really work given the nature of the tokens. And a lot of people in Congress, you know, might say the same thing. Even on the disclosure rules, some people would say, well, they're both over-inclusive and under-inclusive. But again, we need some sort of investor protection framework. I mean, that's why, you know, Jay Clayton and I have argued, let's put in an interim step, which is have the SEC and the CFTC mandate some common rules that ensure investor protection while we sort out these classification problems. I mean, one of the issues with the model is, should you be able to trade Bitcoin and Ether, which let's say are commodities, on the same platform as other things? Now, under, you know, the SEC view, I don't think that would be allowed. But is that the model we want? So again, there are some questions about where do we really want to go, but we've got to have much better investor protection.
Yeah, don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.